Global Gridlock Report, surge in gold prices as market uncertainty drives demand. Gold prices have spiked amid growing global market uncertainty, drawing the attention of investors seeking safe haven assets. As reported by the Jerusalem Post, market fluctuations, inflation fears, and geopolitical tensions are fueling the increased demand for precious metals like gold and silver, signaling investor anxiety about the stability of financial markets and traditional currencies. Before we proceed, please like, comment, and subscribe to help us with the YouTube algorithm. With the world economy facing challenges from multiple fronts, including ongoing conflicts in the Middle East, inflationary pressures in the West, and fluctuating energy prices, investors are turning to gold as a hedge against economic instability. Experts suggest that the surge in gold prices reflects deep concerns about the long-term health of the global economy and its ability to withstand emerging threats. The price of gold has traditionally risen during periods of uncertainty. Investors tend to flock to precious metals when inflation erodes the value of fiat currencies, or when stock markets display erratic behavior. Current geopolitical tensions, ranging from the Israel-Hamas conflict to fears of escalation between the US and China, are amplifying these concerns, further driving up the demand for gold. Analysts point out that the actions of central banks are also playing a critical role in the rally. In recent months, several nations, including Russia, China, and Turkey, have increased their gold reserves as part of broader efforts to diversify away from US dollar-dominated reserves. This trend signals a potential shift in global financial dynamics as more countries move toward de-dollarization and secure their wealth in stable commodities like gold. Inflation remains a dominant factor affecting investor sentiment. Despite efforts by central banks to curb inflation through interest rate hikes, inflation rates in many countries remain stubbornly high. As rising prices diminish the purchasing power of traditional currencies, both individual and institutional investors are seeking refuge in gold. The metal's ability to maintain value over time makes it an attractive option during periods of inflationary uncertainty. Additionally, the recent turbulence in the energy market has contributed to the gold rally. Oil prices have fluctuated sharply due to disruptions in supply and concerns over production levels. These developments are stoking fears of broader economic instability, further motivating investors to shift their portfolios toward gold and other precious metals. The rise in gold prices is also affecting silver, platinum, and palladium markets. Although gold remains the preferred hedge for many investors, these secondary metals are experiencing similar surges, reflecting broader trends in the precious metals market. Some experts believe that as gold prices continue to climb, more investors will diversify into silver and other metals, driving up their prices as well. Despite the positive momentum, some analysts warn of potential risks. Gold's volatility can also increase in times of extreme market turbulence, and sudden corrections in price are not uncommon. Additionally, if central banks successfully rein in inflation or if geopolitical tensions ease, the rally in gold prices could slow. For now, however, the demand for gold remains robust, driven by a complex web of global risks. In this environment, the role of central banks will be crucial in shaping market trends. If global interest rates continue to rise, it could put downward pressure on gold prices by increasing the opportunity cost of holding non-yielding assets. However, if inflation persists or geopolitical tensions escalate, gold's appeal will likely grow further. The rise in gold prices highlights the interconnected nature of global financial systems. As uncertainties mount, both governments and private investors are adjusting their strategies to navigate unpredictable economic landscapes. For nations looking to safeguard their wealth, the growing preference for gold underscores a broader shift in financial priorities, signaling possible long-term changes in how wealth is stored and transferred across borders. Looking ahead, the trajectory of gold prices will remain closely tied to geopolitical developments and global economic policies. As central banks, governments, and investors brace for an uncertain future, gold is poised to play a pivotal role in shaping the financial landscape in the coming months. Whether as a hedge against inflation, a tool for de-dollarization, or simply a refuge from market turmoil, the demand for gold is a powerful indicator of the challenges facing the global economy today. For now, the surge in gold prices reflects the world's collective uncertainty, and offers insight into how both nations and individuals are preparing for an increasingly volatile economic future.